Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the Australian dollar keeps on the bearish path as it descends further and now looks towards the region of 77.70 after trading there briefly at 65. It is viewed at this level is a hedge fund or a CTA, which are known as commodity trading advisors, and a break of this level could give further indication or ramification, more to the point, down towards 75 cents as a target. You can see here that when we break this level of this 60-day moving average, we do stage a bull trend. When it broke here in September, we staged a bear trend. And if we just go back one more time, you can see here in May last year, bull trend, and then in March, a bear trend. This is a good indication, and if we break with a 77.45 offer, would confirm 75 cents. I'm a little bit cautious though to that call due to the fact that we are oversold from an RSI point and could easily see a recovery back towards the region of 78.75 before any down test. But do keep note that this level at 77.70 is very concerning if breached. Overnight, we had two Fed speakers, one being the Philadelphia Fed Patrick Hawker, who said that he is open to the US Central Bank raising key borrowing costs at the March policy meeting. And then we had Federal Reserve President Bill Dudley, who said in a news interview that if US economy keeps getting stronger, the central bank may justify in raising rates 4 times this year. Currently, they're holding the view at 3. On the day, though, I see Euro trading in a similar range of yesterday of 122.15 to 122.90, and after overnight's high, we failing at that 122.90 should still hold as a potential sell zone and eventually see the market sell off. Dollar yen still a little bit on the wary side as it now challenges towards that 108.15.25 area, but still I'm a buyer on dips and I still expect to see that level hold and stage a recovery up towards 109.65. From a technical point, still holds the bullish case, so do be a little bit on the guard if you are short. Well, the pound overnight stabbed up towards the 140 area after the Bank of England left rates unchanged. The Governor, Mark Carney, did come out and say that he felt that he'd rather sit on the sidelines at the moment as the bank, both inflation expectation and growth forecasts for the coming period, all in line. However, the hawkish comments still looming. Therefore, we could see eventually a potential rate hike, probably in the next meeting in due course as well, is the fact that the bank is still above its 2% inflation target. So that also sways for a potential rate rise. In the interim, though, I do expect to see some weakness coming through for the pound and look towards the region of 136.20 as a target and still fail towards 140 the figure. Overnight, the gold responded and ended in a doji after rebounding in front of that 1,300 bullish foundations. At the moment, it does look a little bit more on the bull case. Therefore, could see a rise up towards the region of 1,323 or even to 28 before any turnaround. Support of the day, seen at 15. Silver looking very much from a bull case as it now is finding a base at 16.25. I do expect to see further recovery up towards 16.55 to 70 and still expect to see this base at 25 hold. Rounding off with oil, the market is still slipping further. And now taking out this objective of 60, could see a move down towards 59.10. With further indication coming through that we have reports today from the Baker Hughes, who may see more oil rigs being counted in play, could put bearish implications on oil. Resistance on the day, 61.10. So that wraps up for today. Thank you very much for joining me, and I hope you enjoyed the day and a new start to the weekend.